We were just talking about the banking problems globally, and here is heating up some more. This article was titled, China's Banking System is Headed for Crisis. And I was speaking in one of the last few videos, maybe two of them, about how things typically happen in China first. All of these financial systems have modeled themselves after the West. So they all share similar financial problems. It's no different. But we have this article here, and it begins as such. Kyle Bass, Chief Investment Officer of the Dallas, Texas asset management firm Heyman Capital, wrote on X on July the 9th that, quote, China's banking system is collapsing, unquote. The economy, he noted, quote, has 340% of its GDP in banking system assets. U.S. has 1x GDP. It says over a third of said assets are linked to the Chinese and HK real estate sector, experiencing its own crisis. We talked about that also. Real estate, that sound familiar to you? Commercial real estate problems, real estate, there's problems everywhere. This system is going down. Hey, have your own thoughts, but it is what it is. This is what I'm saying. It says HK real estate sector experiencing its own crisis, down 30 to 50%. China's entire banking system is insolvent, unquote. This is a professional. Its entire banking system. Wait a minute. Now, let me tell you this. I don't expect the new financial system to solve all problems. I don't. But it is the basis from which they build upon. They're going to bring in a lot of different mechanisms to congeal with the new financial system. But that's why we focus on it. Also, it's just a big money thing, not financial advice. This is going to bring the big money. This is my humble opinion. But look how deep the bank coins are with the Hong Kong Monetary Authority and the Bank for International Settlements, who's been working with the Hong Kong Monetary Authority. Isn't Ripple building didn't they build a CBDC system platform for both wholesale CBDCs and retail CBDCs, right? Doesn't their technology function best as a network? Which means a multitude. If they're going to be actually used, and we shall see, I think we're going to see soon enough. If they're going to be used, they have to be used by a multitude of institutions. They want this web built. They want this global web that will allow money and capital to flow back and forth. And I feel like the West is bluffing. I do. When the West talks about, like recently, they were threatening, it sounded like threats to me, to India. And they were saying, hey, India, be careful working with certain banks. I'll say it like that, right? You know, the financial system the West pretends like they don't want to interact with, right? I don't believe the West. I don't believe them. I don't. I believe they want the system to go down so that all of these powerful entities that behind the scenes, they work together behind the scenes. There's money going all over the place. They just put up a facade for the regular people. They must move and control the regular people. Without the regular people functioning the way that they do, the people at the top would not be able to live the way that they do. So anyway, I think they put on a lot of smoke and mirrors because of that. It's about control of the normal people. Anyway, I could go deeper than that, but I don't need to. But I think they want this to go down. I think they want the whole system to go down so they can rebuild it. And they feel as though they're going to make the bulk of the money off the new financial system. They do. It's why they shake up the retail investors so much. They do. They're stalling them out. They're shaking them up every chance that they get. And their money goes around to a lot of different pockets that make sure fear stays in the hearts of the people. And people love fear. They love to be afraid. They've been conditioned for a long time. It's to keep you out of that generational wealth. That's just how I feel. You could disagree with that. So be it. You're going to do it anyway. People are going to be in that comment section disagreeing. But they want to keep the regular people out of generational wealth. They don't want too many. It's only going to be a handful of people, I believe, if this happens, not financial advice, that are going to benefit. But anyway, let's continue on here. It says, quote, it's impossible to profit from China's banking crisis due to the strict currency controls imposed by the government, unquote, a Taiwanese fund manager told Asia Sentinel. See, and that's what I'm talking about. It's not for They don't want. When this goes down, you think that those government officials and their friends aren't going to profit from the rebuilding of such? There's a lot of money in the rebuilding of anything. When something, let's say someone goes into a place, they demolish it. There's someone else that's going to make big bucks rebuilding it. That's where the big money is. And a lot of times, all of those people are working together. Whoever demolishes something and those who rebuild it, they sort of have an understanding, if not a partnership, typically. They're telling a lot without telling a lot. For those who have eyes to see and ears to hear, it says the resolutely we're going to skip that because I don't want to get into any type of like negative political stuff. That's not what I need to do. It says based on research of 27 local banks as of the end of 2023, bad loans to the real estate sector have grown by nearly 30% compared to 2022. The Liberty Times said, quoting foreign research reports. Since the 2021 collapse of the Chinese real estate companies such as Evergrande, Country Garden, Sino-Ocean Group, Soho China, Chinese banks have come under severe pressure. Now, does that sound very different than what's going on in the U.S.? Did you watch those members only videos? Just let them run. A lot of people, you know that these videos are available as podcasts on YouTube Music as well, right? You can just listen to them. Let them run and listen to them. And look at how many, look at the number. That's not that very different than what we're experiencing here. There's massive amount of bank problems. This is global. So where do you run to? Anyway, so are you prepared? You know how to protect yourself? That's what people should be researching more than anything. How to protect my value if a global banking crisis pops off. It says here, Evergrande alone had ties to nearly 180 Chinese banks. In response to the real estate crisis, the Chinese government has implemented several measures aimed at kickstarting the housing market for the first-time buyers. Down payment thresholds have been lowered, mortgage interest rates reduced, and the criteria to qualify as first-time buyer have been relaxed. Now, another question people should have is, how does this affect people in the West? So, to answer that question, here's just a little bit. It affects United States when it comes to global trade and supply chains. Obviously, we get a lot of stuff from China. We do a lot of business with China, right? But here, I asked Perplexity.ai, one of my favorite AIs here, and it says China plays a crucial role in global trade and supply chains. A banking crisis could exacerbate economic slowdowns affecting China's demand for commodities and manufactured goods. Here we go. This slowdown can ripple through global supply chains, potentially causing disruptions. U.S. companies that rely on Chinese suppliers or export goods to China might face challenges such as delays, increased cost, or reduced demand for their products. Commodity prices. China's economic health significantly impacts global commodity markets. A slowdown in China can lead to reduced demand for commodities like oil, metals, and agricultural products, potentially lowering global prices. While lower commodity prices might benefit U.S. consumers in certain industries, they could hurt U.S. exporters and producers of these commodities. Investor confidence and capital flows. The crisis can lead to shifts in global capital flows as investors seek safer assets. This flight to safety can result in increased demand for U.S. Treasury bonds, potentially lowering yields. Conversely, if investors perceive heightened risk globally, including in the U.S., it could lead to broader market sell-offs and increased volatility. Then, of course, you have real estate and financial sector. A crisis in China's property market, which has already seen significant turmoil, could lead to losses for U.S. investors and financial institutions involved in Chinese real estate. However, the direct financial linkages between the U.S. and China remain relatively modest compared to their trade connections. A little bit more. All right, so we're going to stop there with that one there. But man, there's a lot going on globally. I've been trying to cover that best that I can. So now we're going to move on to a little bit of Bitcoin news. All right. I hope you're all having a fantastic day out there. Appreciate every single one of you who watches the video. You actually click the like button. I appreciate that. Thank you very much. This article is titled Bitcoin Forming Massive Bullish Wedge Pattern as Traders See Eyes $85,000. All right, so let's scroll down and find out what's going on. Bitcoin continues to be bullish. Bitcoin's price is forming a bullish wedge pattern while lingering near its 2021 all-time highs, with hopeful traders eyeing a price target of $85,000. It says, quote, Bitcoin has formed a massive descending broadening wedge right around the previous cycle highs, unquote, pseudonymous crypto trader Gel wrote in a July 26X post. This is typically seen as a reversal pattern where the Bitcoin price forms a sequence of lower highs and lower lows, with the gap widening as it falls, with the expectation of an upward trend reversal. Let's go down here a little bit more. Quote, price looks eager for a breakout, and once it does, I expect the move to be sharp. First target $85,000, unquote, they added, which is around 15% above Bitcoin's current all-time high of $73,679, which it reached in March. Bitcoin is currently trading at $67,908, up 2.61% since July 26, according to CoinMarketCap data. A move to $85,000 would represent around a 25% price increase, a spike that was seen on July 21st when Bitcoin bounced back from dropping below critical levels, recovering from $55,854 on July back to $68,101. All right, so now let's move on here. So now we have a little bit of Solana news. So now this article is titled $920 billion asset manager Hamilton Lane floats massive fund on Solana. Solana always has something bullish going on. Recently, asset management firm Hamilton Lane took a step that further underscored the growing integration of traditional finance in the burgeoning blockchain industry. Hamilton Lane, with $920 billion in assets under management, announced the launch of a private credit fund on the Solana blockchain. This means that clients who are interested in the fund, dubbed Senior Credit Opportunities Fund, can get access through the Solana network. Noteworthy, this is not the asset manager's first foray into the blockchain ecosystem. However, it is the first institutional fund launched directly on Solana. And it continues on here. The asset manager, sorry, my apologies. They put a bunch of like extra crop tweets and advertisements and links to other articles on their website, all in between the paragraphs, not on the side. Not at the bottom, not at the top, in between the paragraphs. All right. The asset manager achieved this feat through a collaboration with Libre, a Web 3.0 protocol for the issuance and distribution of funds on chain. According to Libre's CEO and founder, Dr. Avtar Sarah, tokenizing Scope provides the opportunity for Hamilton Lane to deepen its distribution by accessing, quote, mass affluent crypto native, unquote. Hamilton Lane will leverage Libre's backbone infrastructure that links tokenized real world assets to users. I was just talking about this yesterday. Every once in a while, I like to put out a video where I'm trying to convey everything that's on my mind about what I'm focused on at the time. And right now it's on real world asset tokenization because all of these big companies keep talking about it. It's not for nothing. They see big money in this, and I agree. And the utility coins are at the forefront of that. This is why Ripple was talking about RWA. I mean, the trillions look like they're there. So anyway, it says this: Solana ETFs come in March 2025. Sarah acknowledged Solana's, quote, low latency and throughput capability, unquote, citing that these features make it a compelling network for tokenization. It is worth noting that this latest development could position Solana on a new plane. The United States Securities and Exchange Commission approval for spot Ethereum ETFs in May came with a glint of hope for other altcoins. Crypto enthusiasts began to perceive the leniency to go beyond Ethereum with clamor for spot Solana ETFs. Van Eck took the cue and filed for Solana ETF with the SEC. The New York-based investment firm also says wants to provide direct exposure to Sol without the risk associated with the crypto. All right, so now we're going to move on here to a little bit of Chainlink news. And it begins as such. Analyst says Chainlink could climb to $19. Here's how. It says in recent months, the Chainlink price hasn't quite been able to replicate the bullish strength it showed at the start of the year. And the past week was a prime example of the coin's recent struggles as the bulls failed to completely stamp control over the last 7-day period. I'll say Chainlink is another one where it has become a bank coin, and I believe that it's going to be moved by the big companies. A lot of these utility coins have been abandoned by retail. Oh, there's not a lot of retail left. A lot of the retail, due to their impatience, they don't want to wait. Maybe they have some life struggles. I get it. I understand. They've gone to meme coins or they've left. This is what I've heard. It's what I've been told. They've gone to meme coins, and you'll see them promoting meme coins everywhere. So now, how do these utility coins take off if retail is overly pessimistic and has abandoned them? It has to be the companies. That's why I said it from the beginning. I said I'm here for that bank money. I said the banks are going to move everything. The big companies. When I say the banks, I also mean the big companies as well, the big financial institutions, okay? The big businesses. They're the ones who are taking over. They're the ones going to move this price. They're going to use the utility. They're going to put it to the test. It says here, prominent crypto analyst Ali Martinez has shared via a post on X an exciting prognosis on the future trajectory of the Chainlink price. According to the crypto pundit, the cryptocurrency, which has largely struggled, could be set for a price turnaround over the next few weeks. I'm bullish on Chainlink into the next few years, especially if they keep on expanding on their big partnerships, especially with Swift. I'm waiting to see what more they do with Swift. That makes them super bullish long into the future until I just don't hear about them doing anything progressive with Swift anymore. That hasn't even really fully been realized just yet. So that's what I'm looking for. Like with everything that I'm involved in, I'm bullish on it very long term. And if I'm bullish on something in the short term, unless it's like Bitcoin, I typically won't speak about it at all. There's no reason. Yeah, I won't speak about it. So now, so Martinez noted in his post that the price of Chainlink could make a run towards the $19 mark over the next coming months. If the bear market really pops off, then sky's the limit for these types of utility coins. However, the cryptocurrency must break above the neckline around the $15 level, as shown in the chart above. All right, so now let's move on here. We're going to end off here today with a little bit of gold news. So now this article here is from kitco.com, and it is titled Gold to $3,300, silver to $79, and Bitcoin to $105,000 by August 2025. All right, this is coming from Robert Kiyosaki. So it says, quote, I predict gold will rise from $2,400 an ounce to $3,300 an ounce. Silver from $29 an ounce to $79. Whoa, I'll take that. And Bitcoin from $67,400 per coin to $105,000 by August 2025. I'll take that also. Very close to my numbers, actually. It says he concluded, quote, okay, so there you go. So that's what they think about gold, and it doesn't sound that different from what Bank of America was saying. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.